What if I told you that you could start building passive income right away with as little as $1,000? Well, it's absolutely possible. Now, I want to do a disclaimer. This is not get rich quick. This is about building systematic wealth over time. And what I could tell you is I'm a tax attorney, been doing this for 28 years, and I've worked with tens of thousands of investors all over the country. We do over 10,000 tax returns a year for those investors, and I know who makes money and who doesn't. Over the years, I can notice the trends that are glaringly obvious, which is this idea of having money that comes in month after month with little to no effort. And that's what we're talking about. So when I say passive income, as a tax attorney, that means rents or businesses that I do not materially participate in. But for our purposes, it means not having to work for the money. And so I'm going to give you 4 areas. These are 4 big areas where you can start, and maybe a bonus if we have time. We'll go over 4 areas that you could start right now with as little as $1,000 to start generating income in your sleep, where you're not having to work for it. And that's what's most important, is having income come in month after month to pay those bills. And I'm telling you, once you start making passive income, once you start seeing those checks, hey, my bank account just grew and I didn't do anything. Once you start having that happen, it gets addictive, and then you start building on it. And if you can make $20, you can make 200, you can make 2,000, you can make 20,000, you can make 200,000, right? It's just math at that point as far as scaling it up. So what we're going to do is dive into these 4 areas. What I want you to consider is how much time you have available to devote to learn some of these, because some of these you could do just right away. Other parts of these you can make money off of these passive income sources as well if you put a little elbow grease into it. Make sense as we go through them. Another thing to consider is, what are your skill sets and interests? What is particularly speaking to you? Because I'm just going to say, there's not a one-size-fits-all in any of this. You have to figure out what works with your personality, your risk and reward. And also, if you have specific expertise, you may be able to leverage that into making additional passive income sources. And when I say lever, I also think scalability. Can I do this with any dollar amount? So is this something that's just a small amount where I can get in and it's just this tiny little sliver? Or is this something that can be tens of millions of dollars, hundreds of millions of dollars on up? And I'm going to focus on that second category, that's scalable. And that's why it's so important. So the number one area that you can invest in right now, $1,000 and start having passive income coming in, is getting involved with our friends, income-producing stocks, also known as dividend stocks. And before you immediately go and say, wait, I've heard about dividend stocks, people say they're boring. I think immediately of Buffett or some of these guys that buy things and they're getting paid the profit of the company. Let me just give you an idea what this means. A lot of investors invest in growth stocks, which means they're not necessarily companies that are profitable, but their stock is going to go up, or they're going to accumulate or hold on to assets, and it's going to drive the stock price up. There's another type of company out there that we call them a dividend stock that pays out its profits on a consistent basis, which means it's literally lowering the stock price technically by paying out assets that are sitting on its balance sheet, that profit, to you, the shareholder. So the money's in your pocket instead of in the company's. A lot of people the company's got billions of dollars, but I don't have any money in my pocket. I can't spend it. The only way they get access to that is to sell that stock or to lever against it with a security-backed line of credit. But for us, I want cash flow. I want to be able to pay my bills without doing anything with the stock. And that's where our friends, the dividend stocks, really come in. And I'm telling you, there are companies that have been paying out increasing dividends year after year for more than 50 years. They're called dividend kings. There are companies, big companies, billion-dollar-plus companies, that have been paying out profits and increasing that amount year after year for 25 years. Those are called dividend aristocrats. And for a dividend investor, those are our favorite types of investments, because we are buying something and it's immediately going to be paying us a nice chunk of change. Usually between 3 to 6%. In that range, you're going to have a ton of options. But you could be going and saying, let's just say I bought $1,000 worth of stock and I'm getting $50 a year paid out of it. Understand that $50 is going to be $50 this year. Next year, it's probably going to be 55 or 60. The next year, it's going to be 65 or 70. The next year, it's going to be 70 or 75, right? It keeps going up year after year. These dividends increase. So that 10 years from now, you're going to be looking back going, wait a second, I bought this portfolio here, this $1,000 of stock, and it is now paying me over $100 a year. Yes, go watch Buffett and what he did with Coca-Cola. That's a great example. And by the way, Coca-Cola is a dividend king. I think it's been paying out, it's got to be close to 60 years now. It's been increasing its dividend year after year, which means every year you get a raise, whether you do anything or not. So that's our number one. Now, if you don't want to pick individual stocks, you could do an index fund, which is a bucket of stocks. So there's a few. There's VYM, which is Vanguard's high yield dividend portfolio. There's also a Schwab portfolio. I think it's SCHD. That's their dividend producing portfolio, where you could just buy a whole bunch of companies. They're usually in the 4% range. So you're just immediately going to start making 4%. Plus, you're getting the growth on the company. Plus, we have a second strategy, our number two, which is going to be covered calls, which we'll get to in a second. So these things grow over time, both the stock price and you're getting paid. And a lot of people live off of their dividends, and I'm not misstating that. It's really kind of interesting as I watch people that have been long-term investors, where they get to the point where the dividends that are getting kicked off, they're just happy with them. By the way, dividends, misunderstood. A lot of people say, oh, they're taxed as ordinary income. Qualified dividends, U.S. companies are taxed as long-term capital gains. So if you're somebody that's married filing jointly, you're making less than $130,000 a year, when you take the standard deduction, your capital gains rate, your long-term capital gains rate is literally zero. So this could be tax-free money, or you could be doing this type of investing inside of a Roth IRA, a traditional IRA, your HSA, your 401k. This is not something that is a crazy, wild strategy that you can't do in certain types of retirement plans. You could do this in any retirement plan as well. So it bodes well from a tax perspective. But what's most important is that you're getting consistent money year after year, and every year it tends to grow. So that's what our focus is really going to be. Now, I mentioned the second strategy being covered calls, and this is where it really comes in and gets nice. What a covered call is when you own a stock and it's optionable, which means you can write puts and calls against it. A call is I'm selling somebody the right or I'm buying the right. In either case, I'm buying a call. An option to buy a company at a specific price, and a put is just the opposite. I can force you to buy a company at a certain price, or I could sell somebody the right to put a stock to me and buy it. If you understand, there's something called the wheel strategy that we absolutely love here. I wrote a book called Infinity Investing, and the wheel strategy is where you're writing a cash secured put to get into a position, get stock put to you, and then you write covered calls and you're a stock market landlord. You're making the money off the dividend. You made money off the cash secured put. You're making money off the covered call. That's a more advanced strategy. If you like that sort of thing, go into the comments below and write free book. Just write free book, and I'll send you a PDF. I'll send you a link to an electronic copy of Infinity Investing so you can learn these strategies yourself. But the covered call is where you're selling somebody the right to buy your stock at a price that is greater than what you paid for it. So we do an out-of-the-money covered call, which is a fancy way of saying I want to be a landlord. I want to rent out my stock. So if I have 100 shares of stock, I can write an option on it because one option is for 100 shares. So let's say I have 100 shares of a particular company or an index, and I bought it at $100, and I sell somebody the right to buy that same share from me, each share at 110. And maybe they give me 50 cents. Again, I'm just throwing numbers out there. It's going to vary depending on volatility and the type of company and et cetera. But let's just say I do that. I get to keep that money. So let's just say it was 50 cents a share times 100. So I got an extra $50. I could write that and do this on a weekly basis, monthly basis. If you are very active, which is why I say, depending on your time and how much time you have, you could be writing multiple. Write the call, buy it back, write it, buy it back, and make money incrementally throughout the day and consistently make money that way. There's lots of folks that is their strategy. I have people that literally have retired off of their stock portfolios, and their main strategy is to write covered calls and consistently get paid, in addition to getting the dividends as well, because you get the dividends because you still own the underlying stock. So it's marrying those two things together. Again, if this is of interest to you, there's an entire chapter dedicated to it in Infinity Investing. And really, all Infinity Investing is learning how to never have to work again for money, because you have enough assets that you could live an infinite number of days without selling anything, because there's cash flow being produced. And that's what it really comes down to. Now, if you do not want to have to learn how to do covered calls, if you're new at this and you say, but I'm interested in making dividends and covered calls, there is an ETF. Kevin Simpson over at Capital Wealth Partners, I believe is the name of his company, but Kevin Simpson manages an ETF, and its call signal is DIVO, D-I-V-O, and that's what they do. I happen to believe strongly in the way that is invested, and that is a great little ETF. If you want a bucket of stocks, nothing greater than 5% in there. They have a very diversified portfolio, and you can get both. So again, with $1,000, you could do very, very well just investing in those types of investments. Now, the next type of investment, number 3, is peer-to-peer lending. And this is something, is Prosper, Ground Floor, Funding Circle. There's different places. I use Prosper and Ground Floor, but they're microloans. There are lots and lots of loans where I may be putting my money into multiple loans where I'm putting $50 into each loan, and I'm averaging right around 11% as I'm standing here. That's decent money. So if I have $1,000 in there, it's not going to be as liquid as the stock market. So if I have $10,000 in stocks and I need $10,000, I could sell it in a couple days, 2 days. I have to wait, and it's going to turn into cash. If I'm doing it peer-to-peer lending and I am buying into loans, it's a little bit of a longer process to get that back. Depending on the length of the loans, it could be a year before I'm getting 100% of my money back. But usually they get paid off over time. And so generally speaking, you're going to have a wind down period, but they're not as liquid. But what they do is give you a little bit more juice, right? So I'm making 11%. You could be a little more aggressive and get up into the teens, depending on who you're willing to invest in loan to. You could set up your portfolio however you want, but you could start peer-to-peer lending. And I'm going to give you a strategy. I'm not a big fan of debt, period, but I do like leverage. And if I want to jumpstart my portfolio, I can start with $1,000, but if I'm willing to aggressively tackle something like a line of credit, or maybe I have a HELOC against my house, maybe I have a credit card or something, and I'm willing to aggressively pay it off, I could borrow money and put it in something like that and then aggressively pay it down. So if I wanted to jumpstart it and say, hey, I want $1,000 of interest income, which by the way is taxes ordinary income. So like this works really well if you can get it into a Roth or a traditional IRA or a 401k. But even if you just have it in your name, still, it's great income that's coming in. Just know it's going to be taxable to you. But if I wanted that $1,000 coming in, I could borrow, get $10,000 into something like this, lever it up, and then aggressively pay that credit card off. Like I would say within 6 months, be ready to pay that whole thing off. Otherwise, the interest rates are going to eat you alive. But if you are somebody that has a nice income spread, in other words, you're living below your means and you have some money that you're making every month and you're willing to attack that as leverage, go in and get your foothold in, maybe it's a little bit bigger number. For everybody else, I tend to hate debt. I'm just not a big user of it. That's my personal philosophy. I tend to do things cash, but I understand if some of you guys want to jumpstart it, you certainly can. With the caveat, you got to be able to pay that credit card off quickly. Like I would say maximum 6 months. And there are groups that teach this that I've seen, and they have success. So I am going to say it's not necessarily something that I would do, but it is something I've seen people do with success. So it's something that you should certainly consider. So that's number 3, is peer-to-peer lending. Works very, very well if you have a little more of a time horizon and you want a little bit greater return. Now, number 4 is real estate investment trust. A lot of people say there's nothing better to get into than real estate. I have substantial real estate holdings myself, over 300 properties. I love real estate. It's one of those areas where you get huge tax benefits. You can lever into if you need to, which means you could use the property to pay off any loans on it, so you're not coming out of pocket. That's called leverage as opposed to debt. I'm okay with it to a certain level. But if you are not in a position to go out and buy rental properties, a REIT is just buying a share, but its underlying assets are real estate. And there's a few of them that I invest in: Federal Realty Trust, and Public Storage. I think that's what is the PSA and Realty Income Corp. All of those have great returns. They're all, I think, 4 and 5%, right in that range. It's real estate, it's underlying real estate, and I'm a big believer in having real estate in your portfolio. And a REIT is a great way to get involved. If with as little as $1,000, you could actually be exposed to real estate, getting a nice return. And the beautiful part about those returns is, like Federal Realty Trust, for example, is a dividend king. It's been increasing its payout every year for 50 years plus, more than 50 years. So you know that if I invest in it today, in 10 years, I'm going to be making more than what I'm doing now. It's going to consistently keep going up, and that's what you want. Now, there are no guarantees in this world, but when something's been doing it for 50 years, I think you can say, hey, they have it dialed in. Or if they're consistently paying out that dividend, maybe they're not increasing it every year. Maybe they've had a blip, but it's one every 20 years. Fantastic. I'm still going for it, right? The easy ones are the aristocrats and the kings, because they've been doing it so long consistently. They've been through up cycles, down cycles, sideways cycles, and consistently rewarding their shareholders. I'm okay with that. Now, with REITs, when they pay out, it's ordinary income. So that's another tax consideration. These things work really, really well if you can get them into a Roth IRA, a traditional IRA, an HSA, a 401k. All those are great vehicles for these, because you don't have to pay any tax on it. If you're willing to let that money compound, it'll do you a great service if you do this consistently over the next 10, 15 years. Just planting those seeds, boy, will they bear fruit over your lifetime. Boy, will they be paying out a considerable sum of money. When you start adding it up, you'll be like, whoa. And it's compounding. The growth on those continues to grow as well. So the value of the REIT continues to go up. There are, I think VNQ is an ETF that is for REITs. So that's Vanguard's fund, VNQ. And so if you felt like it, you could just say, hey, I don't want to pick. I just want a decent return. I'm looking for that 3, 4, 5% return every year, and I want it to be consistent. Then you could do like a VNQ. And if it goes up in value, obviously you get that as well. It's like getting the frosting on the cake. Last, I'll do this as a bonus strategy. So number 5. There's 4 big ones. 5, this is kind of a pseudo. And I'll just say this. If you're willing to, and you have an expertise, start something like a YouTube channel, start a subscription service. I've seen them, people that did and made substantial amounts of money doing subscription services, doing things like, the lesson plans for librarians, playbooks for football coaches, felting. I've seen all of those. Believe it or not, all of those were ended up being multi-million-dollar businesses, simply because somebody had a passion and they took it and they opened it up to the world. And you can do that very easily with a camera and a microphone and doing something like YouTube. There's plenty of other platforms, Udemy and all these others, where you can start getting Kajabi is another great one, but you could start doing something where maybe somebody's paying you a subscription for your expertise, your content, or you create a community. All of those things can start making money for you, whether you're sleeping or not, right? You still have to put a little more energy into it. And especially if you go like YouTube, you're going to have to learn the algorithms. You're going to have to learn how to edit. You're going to have to learn how to do all these things, all of which can be done at low to no cost. You could do it all. And you could learn how to do these things. And then once you start getting those checks and you're realizing, wait a second, just because you create content others are interested in, and this really comes to play, is do you have an expertise? Do you have a niche that you're passionate about that you could go into? But if you have that coming in, I'm telling you, it's lights out when you start seeing those checks come in and you're not having to work that. I think you're doing a video a week. Some people, they have their groups and they're just doing group meetings, and you're really doing it. You're doing it anyway. You're already doing some of these things, and now I'm just formalizing it as a group, and I'm charging for admission. When you start getting those funds coming in, you realize how easy it is, and it's something you're doing anyway. It's not even work. It's a game changer, and it's a life changer once you realize the power of that. You get, 1,000 people paying you $25 a month. That's a lot of money coming in consistently, day in and day out, simply because you're doing something that you would be doing anyway. We've seen it with gamers. We've seen it with all sorts of niches where they're making money. And they're like, I can't believe I make money doing this because it's so much fun. That's another one. But the real key is you're not changing your time for money anymore. You're creating content that lives forever. I'm not going to tell you to go out and do an eBook or any of that stuff. I mean, that stuff is really, really difficult. But content and communities seems to really resonate with people, especially if it's something you really care about and they can recognize that passion and it's authentic. People gravitate towards that. And that's another one where you could be making money passively while you sleep. So those are really the areas. I just gave you 5. I threw them out at you. But those are ways that with as little as $1,000, you can start making passive income. If you like this information, like and subscribe. And just remember, you can get the free book, Infinity Investing. All you got to do is go down in the comment below and type in free book. And if you think I missed an area and you're like, hey, Toby, here's another one that you should consider, please put it in the comments down below as well. I do read the comments, and I love what you guys write. You always give good ideas. Thanks again, and I'll catch you later.